What is going on, everybody? It's Jordan Johnson here. I hope you all had a good weekend and ready for another profitable trading week. I took a poll last week, at the end of last week, in the Telegram channel, where I basically, I asked people, what are you struggling with the most when it comes to trading, and what type of video, you all would like to see, just to kind of help you out with that topic. Then I did get a lot of messages. I love it when you all message me, so thanks for the messages. And a common topic, I think I probably got it maybe 20 times, was a lot of people was curious of what I do when I first look at a chart, like how I analyze a trade from, start to bottom. It's pretty complex answer, not too complex. So what I want to do today, I'm gonna make a quick video of how I do top down analysis, of how I analyze a currency, a commodity, an indices. It don't matter what instrument that you trade. I always stress that. You all see me you trade in a variety of markets. You see me trade, currency pairs in the Forex market. You see me trade, E-mini S&P, commodities, corn. I trade it all because when you learn the skill set of technical analysis, it doesn't really matter what you're looking at. You can trade anything because it's the same concept. So today I'm gonna go over kind of some basics of just top down analysis, what I do when I first look at a chart, a few things that I look for personally. And I'm gonna try to keep it basic, so not too advanced. But you all should definitely get value from this video. It's not gonna be too long, so let's go ahead and jump into it. So let's just use Euro USD. So one of the first things I like to do, I like to start on a higher time frame. Me personally, I am a swing trader. So that usually means I hold my trades for anywhere from a couple days to maybe even a few weeks. That's just my trading style. On the Forex chart, I like to at least try to get about 100 pips out of a trade if I can. So let's start out on a monthly time frame. So let's make this a little bit bigger. So top down analysis. So a lot of times if I'm first looking at a pair, when I'm first doing my analysis, I like to start on a higher time frame, like usually the highest time frame being the monthly time frame, just so I can see the overall bigger picture of things. So first, let's just say I'm looking at Euro USD. I start out on the monthly time frame. First thing that I do notice on the monthly time frame, we are on a bearish downtrend. How do I know that we're on a bearish downtrend? You can look at price, and price is going left to right. You always look left to right, but price is going top to bottom, which indicates a bearish downtrend. Some people can look at this and say, well, hey, if you look at January 17, price was going on an uptrend and we've been going down ever since. I look at this as we are on a downtrend to move, but not looking at it too big. So let's look at the last 2-3 months. So we look at this, it's just the current month that we're in right now in September. If you look in August was a big bearish month. We have a nice kind of shooting star candlestick formation. Month before that was a very bearish one. And we did kind of have a bullish month in June. But this bullish month was trumped by this bearish month. So I just let you know that the bears are kind of in control of the Euro USD on a major time frame. So look at that. So the monthly time frame is definitely kind of bearish. Let's go to a weekly time frame and see what we see. So let's go to a weekly time frame. Let's kind of zoom in. Let's take this oscillator out. So look at this on a weekly time frame. And as y'all can see, we have been trending bearishly down. Two things to notice. It's just the current candlestick we're right now. This is the current week. The last two, as you can see, the last 2 weeks before that was bullish. So that's something that, you definitely will want to pay attention to. So one of the first things you want to do when you are, what I like to do when I trade, I like to establish a trend. I like to trade in the direction of the underlying trend. So that's why we start with the higher time frames. And as you're going to see, we're going to work our way back down to the intraday time frames to kind of have some type of a bias. A few things I like to do on this. As you said, we're on a weekly time frame. I like to try to chart out some levels. So this right here is just going to be a weekly level of support. We're going to have a weekly level of support right there. We're going to have a weekly level of resistance at the high of this candlestick. I'm not gonna get real deep into the actual strategy and methodology. It's more so just kind of showing you all how exactly what I'm doing just with the top down analysis. So we want to try to establish trend. We want to place some type of levels on the chart, and these are weekly time frame levels that are going to be very strong. Let's drop back down to the daily. Drop down to the daily time frame. We kind of already established this on the high time frames when we established that we are in a bearish trend. So let's do this. Let's just zoom out. And if you don't know what a bearish trend consists of, a bearish trend consists of lower lows and lower highs. So I understand a lot of you all probably know this, but you'll be surprised at how many people don't that has been trading for X amount of time. So let's look at a bearish trend. Bearish trend, we're going to have a lower low. We're going to have a high. We're going to have a lower high, lower low, lower high, lower low, lower high, lower low. That is a bearish trend, you all. That is exactly what we are seeing right now. I can draw it out for you all. Let's just start looking from at the top. Classic bearish trend. This is just a classic bearish trend. So even if you was just trading off this classic, just regular bearish trend, no basic strategy, no advanced strategy, or nothing, we will look for price to create newer lows. That's just kind of how we were sitting there. We're not bringing in divergence or any advanced technicals. This is just basic technicals, basic price action. So we are in a bearish trend. Another level I'll point out, I like to always add, just different levels. This is going to be a key level of resistance as well. Also followed by this strong weekly level of resistance. Now let's hobble down to a 4-hour time frame. So you notice how we started on the monthly time frame, get the bigger picture, and we're working our way down. We got some major support resistance zones, some supply demand. These are really just to kind of point out the highs and lows of the bearish trend. Once you've been trending for a while, you'll be able to see these levels. You don't have to draw out everything. It kind of clutters the chart when you do. I just want to be able to kind of show you all. So next, 4-hour time frame. What will we do at the 4-hour time frame? Now it really depends on your strategy, you all. It depends on what type of trader you are. Are you going to be a counter trend trader where you're going against the trend? Those are usually like your scalpers. You don't really have to scalp to go against the trend and be a counter trend trader. But typically when you're a counter trend trader, you're not staying in the markets for a significant amount of time. Are you a swing trader and you're looking to set up and get aligned with the underlying trend? So what I would like to do in this example, with me being a swing trader that likes to trade in the direction of the trend, I will look for setups that is going to give me a potential bearish setup. So I'll look at this on the 4-hour time frame. Let's look at this on this 4-hour time frame. We can see price has been going down quite bearishly, very bearish. I look at like stuff like this as just as a corrective structure. It's kind of more in detail. Just with my Elliott background, I'll look at something like this. This is nothing but a bullish corrective structure inside of a bearish trend. Definitely don't want to confuse you with that, because especially if you're a newer trader, you can really get confused by, especially when you start to add wave analysis and other advanced technicals. Let's drop down to a hourly time frame. So drop down to an hourly time frame, especially if I'm going to start looking for sales. A few things that I like to do. We can label out some type of support resistance on a smaller time frame, like the hourly time frame we're on. Let's just label out this little box here. We have support down at the bottom. We have some resistance at this high. We got some support. We got some resistance. Also, I'm very big on Fibonacci. Not to get too in detail or advanced on Fibonacci, we can put some levels here. Start from this high down to this low. We have a 38.2 level right here. Zoom out a little bit. 38.2 level right here. And then also, if you look to the left, as always, structure does leave clues. So this would be its whole little area right here. It's going to be a box. Me being a swing trader, I can wait until I like to, let's just say, if I put a little zone here in between 38.2 and the 61.8, which are Fibonacci retracement levels, I could wait for price to enter this zone and give me a potential short setup. So it comes back to trading. You all want to think of trading like chess and not checkers. With checkers, you're kind of just trading, one move at a time. Chess, you're thinking 3, 4, 5 moves down the road, really strategic. So with trading, you want to have a if-then thought process. So if price do this, then I will do that. If price do that, then I will do this. You really want to have a plan for your trading. You just want to be prepared. Kind of like a good boxing fight. You want to be able to throw some counter punches. Bob and weave, get out the way. You are in a fight with the markets, so you just have to be prepared. And that's why we place out these levels on the chart, so that we know if price gets to this level, I'm going to be prepared and I'm going to be ready to do this. Just very basic stuff, you all. So we mapped out a zone. We can bring these fibs off. We got it kind of cluttered. And some people, I usually don't get a whole lot smaller than an hourly time frame, me personally, but you can even go to a 15-minute time frame, especially if you're an intraday trader. 15 minutes is a good chart to look at, and you can kind of see this bearish trend a lot more. We can also add another little Fibonacci retracement, kind of small. We took it from the very top last time. We can take it from this top as well. See if we got some cluster. Smaller 38.2 up around this level right here. I like to use Fibonacci extension as well. I will take a extension from there to there, kind of give us another little box that you can pay attention to. And on the 15-minute time frame, you're just gonna be small levels where you're not gonna get as big of a reaction from. But we can look at something like this. You know, we got another level placed out, but these others hourly support resistance lines. I'm gonna pretty good. I think we actually drew this on a 4-hour time frame. So if I was looking at this on a 15-minute time frame and I was looking at trying to actually get into a trade, two things I noticed. We are on a nice Birch Trend on this 15-minute time frame, but this is what my counter trend traders. You know, if you are a counter trend trader, what are you looking at? I can notice, hey, we got a double bottom here on the 15-minute time frame. How do I know it's a double bottom? It's telling you it's a double bottom. Let me get some arrow tools. We're going to get an arrow here. That's one part of the double bottom. Let's clone. So we got a double bottom. This is a it's a counter trend setup. Let you know that, hey, price might not keep going straight. It's showing some support. It's showing some support, and price is probably gonna go up a little bit more. So we got a nice double bottom. We also got bullish divergence. If you don't know what bullish and bearish divergence is, I suggest you look it up. Especially if you're a counter trend trader. Or even if you're just a regular trend trader, swing trader, divergence is big. I like seeing divergence when I take some of my trades. It helps you get good entries. 15-minute time frame. So where can price go? I know. So two things. If I am a counter trend trader and I want to take advantage of this bullish move, and I'm trading, let's say if I'm trading for the, trying to just take some quick up move opportunity, I might do something like this. I might get on a smaller time frame, like the 5-minute time frame, and I would wait for, let's get this brush tool. I will wait for a setup like this to go higher. That, to take advantage of that. But like I said, let's just keep it simple with what I would do personally with me trading as a swing trader trying to get into the trend. You see prices moving up. Prices are gonna come to one of these two levels, more than not. And just so you all know, if you're watching this like after I'll record this video days afterwards. Today was actually the morning of Tuesday, September 17th. I'm happy to be recording this around London session, and it's 3:30 in the morning. Look at price. Price is moving towards these boxes that we already mapped out. Remember, this is going to be kind of that first level of it's a supply zone. So if you don't know the difference between supply and demand, another topic that you should go research about. Supply is going to be a box. It's going to be an area on the chart where your sellers is going to come in the market. Usually when price come into a supply zone, you're going to look for price to drop. When price go to a demand zone, it is going to act as some type of, so supply zone is going to act as resistance. When price get to a supply zone, it typically drops. Like right now, we have two boxes that which you can call them supply zones. You can call them resistance, or you can just call them key levels. It don't really matter what you call them. Don't get caught up into that. But just know when price usually get to a supply zone, price is going to show some type of resistance at that supply zone where it's holding up resistance, and you're going to see it drop. Opposite with demand zone. When price falls into a demand zone, usually buyers is going to come into the market and they're going to be buying. This demand for that product, and price is going to go up. Just kind of some basic economics, supply, demand, and that's pretty much what you see on the chart. We mapped out some strong supply zones. So 15-minute time frame, I would want to see what price do when price get up here, and these is areas where I will be looking for shorts. What am I personally looking for when price get into these levels? I'm looking for any type of indecision where the market is telling me, okay, prices may be ready to turn around. I'm looking for, like I pointed out earlier, I'm looking for divergence. I'm looking for candlestick reversal patterns. I'm looking for very specific trade setups that are in my trade plan that I'll look to, basically what you call your entry techniques. Everybody should have a entry strategy. What allows you to get in a trade? That is an entry strategy. You should not just be clicking buy and sell just because you think it's a good time to be buying or selling. That's not a strategy. You should have some very clear rules that tells you when to get in a trade. Like, hey, entry strategy could be like, hey, we formed a double bottom that is giving us divergence. Price took the high out from the double bottom, and now it has retraced to the 61.8 Fibonacci retracement level. It gave me a morning star reversal pattern, and that is my entry technique to get in. With your entry technique, you need to have then a trade management. How much of your account are you risking per trade? Where do you place your stop losses? You're not supposed to just put random stop losses, just putting a stop loss somewhere just at complete randomness. You want to have a strategy to where you had your stop loss. Where are you getting out of the trade at? That is going to be your take profit. Where are you looking to get out of a trade? Anytime you enter a trade, you should have some type of idea. Well, you should, not an idea, but you should, when you enter a trade, you should know, where your stop loss is. Where are you going to get out of this trade at? You need to define your risk. When you get in a trade, if you are not defining your risk, you are gambling. That's exactly, you're just gambling. You don't have no plan of how you want to get out of a trade. A lot of people look at just what to do before you get in a trade, but it's easy to get in a trade. Anybody could get in a trade. It's not rocket science to get in a trade. A lot of people drop the ball when they don't know what to do because they don't know what to do when they're in a trade. They don't know how to manage the trade. They don't know how to secure profit. They don't know how to, get out of the trade with profit. They don't know how to cut losses. So it's a lot of things that you need to learn how to do once you're in a trade to successfully manage a trade. How to take a losing position to a winning position. How to know when to hold on to a losing position. How to know when to hold on to a winning position. How to scale in and out of profits. And how to cut profits. A lot of people don't know that trading is much more than just buying and selling, getting into a trade, just the basics of technical analysis. But not to go on a rant not to go on kind of a off topic on that. This video is just to really show you the basics of what I do from top to bottom when I'm looking at a fresh chart and I'm analyzing it. So we're on the 15-minute time frame. And this is actually during London session. So we're waiting. So me personally, I will be waiting for price to get into these levels. Why is that? We look at this. We already noticed on the monthly time frame all the way down, price is on a big kind of a bearish trend, which I like to see. But it's also important to remember, like, it's just let's just say look on 15-minute time frame, it's just the bearish trend. It's arrow. Remember, you always gonna go left from right. Bearish trend is gonna go from top to bottom. A bullish trend is gonna go bottom to top. So everything left and right. We're going from the past to the present. If you didn't notice on charts why you always go left and right, you're going from past to present. If you look back at the past, it's always going to give you clues of where the present is going, kind of just like life. That's why we go to history class and stuff in school. If you can learn about the past, you can get an idea for future. It's a cycle. It keeps repeating itself over and over again, especially with these charts and technicals. Once you've been trading for so long, you all these setups, you're going to be like, I've seen this setup before. That's how you gradually get better over time. I've been trading for 4 years, going on 5 years now, and I mean the setups are the same. It's nothing spectacular about these setups. The setups are the same. It's just about developing some type of mental strength, and just kind of remembering them and setting up these strategies. So anyway, big bearish trend. We noticed that. It's also important to realize, you all, price never goes straight up or straight down forever. Price never trends forever. It doesn't. The market actually only trends about 30% of the time. So it's important to remember that if the market only trends about 35% of the time, what is the market doing the other time? The market is consolidating. About 65 to 70% of the time, the market is consolidating. Hey, what is consolidating? Consolidating is what we're doing now. Consolidating when is what the market do when it's not trending. You see it all the time. Consolidating is just when the market's going up, down, up, down, up, down, up, down, up, down, up, down before it takes off. That's consolidating. You'll see the market consolidating between support and resistance all the time. That's kind of what we've been doing here. It's just called consolidation. What this market is doing, all this is consolidation. The market's consolidating. The market's trying to break out of this consolidation where we're playing with this resistance. It consolidate up a little bit, might get to that box, come down. If it don't do that, it come up here before it ultimately trends down. So the market is consolidating. So that's why we got these levels that we want to have a plan for when the market do stop consolidating. How do we get into a trend? So that's what we're looking to do. So nothing, like I said, it's going to be a quick video. So we're coming to an end on this video. What would I like to see on this 15-minute time frame? It's just we're approaching the first level of where I would like to see. If I'm looking for setup, it's going to be the first box to where I'm looking for a potential trade setup for me to get short. And then remember, we're trading with an if-then process. We don't, know 100% what these markets is going to do. That's why we got a trading plan. That's why we got strategies. We got a proven trading plan. We got proven strategies that we have tested that gives us an edge in the market. Whatever your edge is, you want to have a strategy and a trading plan with a edge that's giving you an edge in the markets to where you know that the odds are in your favor. You want to put the odds in your favor, so that way you're not gambling. If you don't got a clear trading plan that is defined with with rules, you're better off going to the casino and just getting on the crap table or roulette and just gambling. I mean, you really are. So I want to see price get to these levels. What I'm looking for when price get to these levels, it's not rocket science, you all. I am looking for candlestick reversal patterns. I'm looking for divergence. I'm looking for setups. Will that be an Elliott wave setup? Some people look for harmonics. I'm very fluent in harmonics as well. Let's just say you were looking for a Gortley, something like this. As possible. There's so much technicals. It's so much stuff that you could look for. You can look for Gortleys, bats, ciphers, butterflies. You can be a harmonic trader. You can just look for a regular, even without all of that, you can just a regular technical trader. You can look at this prices. Is playing around at this 15-minute level of resistance. Look for a reversal pattern. You can do that as well. It's so many things you can do. But this was just a basic video to show you how you can start. How I just look at a chart from not having no bias at all to first you want to identify the trend. You need to determine what type of trader you are. Are you a trend trader? Are you a counter trend trader? So identify the trend. Narrow it down to smaller time frames. You want to identify levels, areas of supply, demand, support, resistance, key levels, whatever you call it. Some people use Fibonacci. I'm very big on Fibonacci, using Fibonacci to help retracements and extensions to help you get these levels. Then identify your entry techniques. What are you looking for? Are you looking for candlestick patterns? Are you looking for divergence? Are you looking for oversold, overbought areas to where you want to sell at, where you want to buy it? Are you a harmonic trader? Are you looking for Gortleys? Are you looking for bats, butterflies, cipher? Are you an Elliott wave trader? The list goes on and on and on, but this was just a very beginner friendly video, what I feel is a beginner friendly video, to kind of give you some type of idea if you are struggling with these concepts. Then if you are in the $1 Million Business Telegram group, then you know, I said I am working on a comprehensive course that I am going to put out to the public. Now that course is probably not going to be done until Q2 of next year, so Q2 of 2020. Just because I want it to be a quality course. I want to cover a bunch of material that somebody can sit through, that don't know anything about trading, and that can go from A to Z and really be a successful trader. And it's going to cover even stuff that people that, if you've been trading for years and you don't know the advanced concepts like just, harmonics, Elliott wave analysis, it's going to outline everything for you. So look forward to that. In the meantime, though, I have started back doing kind of just the training camps, trading camps, where kind of trading boot camps, where I work with a very select group of people, to where I kind of work kind of more on a hands-on basis with you. Now, I'm not taking many people. I just can't, because it's very time sensitive. I just can't take a bunch of people. But if you are interested, depending on when you message me, it may be a wait or not. So just let me know if that's something you are interested with. I've been getting a lot of great feedback about that. So you're going to say, I want to put out more content for you all. I mentioned in the Telegram group about the next little account challenge I'm going to be doing. Everybody know I got an account with TD Ameritrade, but I am going to start another account as well, and kind of let you all see the progress of me really grow that account kind of aggressively. So watch out for that. I'm going to document that on YouTube. I go on vacation later this week, getting ready for my birthday next week. So I'm going to be on the West Coast for about 5 days, but I'm going to have everything in line for that, you all. As always, man, if you are receiving value from these videos, like, share, comment, introduce the content to other traders. At this time, then on my YouTube channel, it's a nice amount of content out there, whether it be just a regular analysis or just regular videos, to where you all can look at it. You can see my trading style. You can see what type of trader I am, the content that I do put out there. I try to be consistent with my message, to help, newer traders, advanced traders, whatever type of trader you are. I try to be consistent with my message. So I definitely do appreciate all the support that you all do give me. I really am passionate about trading. I love it when new people get into the markets and that's trying to learn. And I try to, I try to teach it the correct way. I try to, show the correct way. I don't promote it as a get-rich-quick scheme, kind of a money flip thing, to where you can just deposit money into an account and start making money. I like showing the good and the bad with trading. That's why I show wins and losses on my account. I don't just show you all when I make thousands of dollars. I show you all when I lose thousands of dollars, because it is a part of trading. It's not all good. Sometimes it is some bad into it. And you got to have the right mentality, the right mental to persevere through that and to keep going. As on your road to being a consistently profitable trader, there is going to be ups and downs. But not to go off on a tangent, you all. If you do see the value, like, share, comment, subscribe to YouTube channel, whatever you can do to support. Also, as well, if you're not in the Telegram, if you're watching this on YouTube or somewhere and you're not in the Telegram group, please join the Telegram group. It's $1 Million Visions. We got about 460 people in there. Follow the Facebook page, Jordan Forex Trader. If you're not watching this on YouTube and you're watching it in the Telegram group or on the Facebook page, subscribe to it on YouTube. Just because that's where I'm about to upload it to. But I hope you all had got a lot of value from this video. I told you I was going to give it to you all, so I want to take time out of my day to put this together for you all. I hope you all have a great day.